Hi, everyone. Thank you for joining us on TMC Connect today. Today, we have driving purchase business in a purchase world with our preferred partner, Clever Real Estate. And I'll let them take it away.
Great. Hi, everyone. My name is Grant Moon, working closely with Clever for the past year now. Um, just by way of introduction myself, I spent a good portion of my life working on the purchase conundrum. Um, Went through multiple cycles with a few different companies, a lead gen company and also a conversion optimization company. Um, and so I'll be guiding and sharing some data, but we have a lot more distinguished folks that are on the panel. And I'll start with Craig Martin from JD Power and Associates, which this is a little bit of a rare um, joining an opportunity that he has, given that JD Power does a lot of data studies on the mortgage market, financial services, and we have some great data to be sharing today as well to the TMC community. But I'll also let Craig say hello to the group and introduce himself with additional color.
Yeah. Thanks, Grant. Great to be on. Pleasure to connect with everyone virtually. As I said, Craig Martin. I've been with JD Power 11 years now. Have focused originally solely on mortgage and now expanded to broader financial services. But always have a close tie back to the mortgage world and really enjoy joining all of you. So looking forward to the discussion.
Great. Thanks so much, Craig. We also have Luke Babish, the founder and CEO of Clever Real Estate, as Sarah mentioned, sponsor for the overall webinar, and really a smart guy who's built an amazing business with Clever. But he's also traveling to the airport, as you would have with any type of startup hustle. So we'll also give him the opportunity to say hello to the group. And Luke, please say hello. No. Okay. So he might be having a little bit of technical difficulties in terms of just getting over to the airport. But as I mentioned, Luke is the founder and CEO of Clever Real Estate, sponsor for this webinar and ultimately TMC2. We'll be discussing some ways based on data that we found in the marketplace, brought to you by JD Power and Associates, and talking about some of the great things that Clever does for other lenders. But before we get started, Sarah and I just quickly put together some polls here. So just wanted to pop up a poll. And if you could just let me know if you see the screen, just trying to get an understanding of our audience today to best tailor the overall presentation. So if you wouldn't mind just going ahead and clicking one of the radio buttons that best describes you, so that we can appropriately tailor a lot of our discussion today around what's going to be most impactful for your type of business.
Sorry, I'm late to the party. I've had a wealth of adventures on Ubers and airports this morning. So I'm mostly just sad that I had to miss your improvisation because I'm sure it was grade A class act as always.
I think that the TMC community is very entrepreneurial in their spirit, and they can appreciate a sponsor that is out making things happen.
Absolutely. Yeah, I dropped in the chat the results from the poll.
Great.
We've got 27% consumer direct, 55% retail, and 18% hybrid or combo both.
Outstanding. Thank you so much. And we're going to drop one more poll out here as well, just to further drill that down to make sure that our presentation is going to be most impactful for you today. And I just don't see that prompt. There we go. Okay. So one more poll before we get started with some of the great content that we'll share today. So what are the biggest challenges that you anticipate for 2024? Driving more originations, reducing costs, and maximizing what you already have.
We're still getting some results in, but currently we're at and climbing around 90% for driving more originations and 10% for maximizing what you already have.
Okay. All right. Well, that's actually comforting, right? Especially given the 2022 and 2023 mantra that I've consistently heard across multiple lenders that we've worked with on the challenge of reducing costs. I love now that everyone, based on this poll in the TMC community, is shifting to a lot more offense, which we all like to play offense a lot better. And I think that there's great opportunities just given some of the market conditions. So thank you all who participated and answered accordingly. If I could, Sarah, I need to share my screen with a presentation so that we can get started.
Yeah, there should be a button at the bottom that says share screen.
Great. Thank you so much. Okay. Let's see here. So the fellow panelists that we have, just to give everyone some background, we actually were able to present this not too long ago in Las Vegas for the Digital Mortgage Conference. So I think that we got amazing reviews from what I saw. One of the top sessions of the day from a review perspective. So we hope that we can emulate that type of success for everyone here. Let's go ahead and get started. And I'm just trying to get this into slideshow mode. Okay, here we go. We missed Luke for a hot second. We know why, but let's just go ahead and let Luke introduce himself and give us the story of Clever, Luke.
Yeah, so the background on Clever. Clever's on a mission to connect people with the most trustworthy advice and the best solutions for every step of their real estate journey. And there's 3 pillars to how the business does that. First, we run a set of consumer education brands. We're talking online content, which collectively reach 10 million consumers every year with educational advice about how to sell or buy a home. Second, we have a network of around 20,000 realtors who we've individually vetted, recruited, onboarded, and we use our technology and home concierge team to connect our readers with those local professionals to help them take their journey offline, guide them through closing, and we leverage our scale to negotiate better rates on behalf of consumers. We've helped folks save over $160 million on fees and sold about $8 billion in real estate since we got the company going in 2018. And then the last piece where we've plugged in with lenders is helping lenders, typically on the consumer direct side, break into purchase originations by giving them a trusted, vetted, and trained realtor network all over the country, anywhere they're doing originations. And we have technology and SOPs to make these realtors be effective partners to consumer direct operations. And so through that, we've gotten to work with some really strong consumer direct shops and set up some very high converting purchase channels. And also we've gotten to learn a lot about what it takes to get high functioning collaboration between loan officers and realtors, which applies whether you're trying to do that in consumer direct where it's that much harder, or the same principles apply to the retail side quite a lot. I think there's lessons that work for any business.
Great. Thanks so much, Luke. And for those 20% or so of consumer direct lenders on the line, definitely an equalizer, especially when you're competing with the likes of Quicken Loans that have a full technology stack, a full real estate stack that gives the little guy an advantage to be able to compete with some of these bigger guys that have the war chest to invest in their overall infrastructure. So if you haven't heard of Clever or you haven't talked to Clever, this would be a great opportunity to position yourself well. And I'm sure you're planning for your 2024 and beyond and getting more originations. and Clever is the perfect solution to do so. So I highly recommend reaching out and getting an understanding a little bit more of how Clever can be impactful to your overall business. So I know we're all privy to the economist forecast from the MBA. We always know that there's overall variance, but we're also starting to see some interest rates come down, which is great for the market. I won't belabor that point, but that means that ultimately we should have more originations from a macro perspective arriving to the lender market here in 2024 and beyond, which hopefully is great news for everyone. It certainly is great news for myself. And as we can see here, I'm just going to throw some stats out there, but the NAR, who, if you're from Missouri or if you're in the industry, knows that they're not too much in favor anymore, but they still have good economists that they produce some decent data. But we're looking at 31% of first-time home buyers. So roughly a third of the market out there needs a lot of the education, needs a lot of the hand-holding, and needs that high-touch service. And if you are that consumer direct lender, that's a perfect plug and play that gives you the additional originations brought to you by Clever. So just wanted to hammer in some of that point as well. You also have 41% of the market that's starting their search online. So how good is your online presence? Do you have tools and a technological stack that is outside of just a digital mortgage, right? So, are you also engaging with that consumer and giving them the ability to search for homes through your branded content and or own blended platform too? I know that anyone that I've ever talked to that starts looking at homes starts doing it online. So being able to have the capabilities that engage with your consumer and your upstage or your up funnel of consumers that you're incubating that are interested in purchasing home is something that you'll want to consider for 2024 and beyond, because every indicator from a trend perspective just shows that this is growing. The other things are pretty interesting. 67%, according to NAR, only interviewed one agent, right? So to have that agent that is very friendly to you is highly important. If you've been in the industry for a little bit, I'm sure you know that the agent has an incredible amount of swaying power, right? And sometimes those sways away from you, especially if you've invested all the time in pre-qualifying that customer and getting to know that customer, is often known as a flip. And that's not good because you're sinking your team's time, energy, any type of lead costs or acquisition costs into getting that consumer without having the appropriate infrastructure to incubate that consumer, keep an agent that is friendly to you, and ultimately bring that to a close, which is something that Clever does. And Craig's going to be able to share a little bit more information and insights into that. Other things are 42% find a mortgage lender online, but only 44% close with their homes with the existing consumers. So you're starting to see that leakage. And realtor recommendation compete is the #1 reason consumers go to a different lender. So a little bit of more statistics around how important that agent engagement is, and the ability to have that infrastructure in your process that helps incubate the consumers, that helps bring them to a close, that brings you an agent that's friendly to you in your brand as a lender, but also having the capabilities that are able to create engaging content throughout all steps of the overall home buying journey, because we know that it's often a long journey, which makes purchase relatively difficult. But there's a lot of great lenders that we're seeing today, and characteristics of lenders that are really succeeding in that. So I'm going to go ahead now and hand this over to Craig. I think that this is a perfect opportunity. It's pretty rare where JD Power and Associates will get on and be able to share a lot of good data that they find. They typically for more robust options, they have a great deal of packages that can help lenders drill down a bit more and make some effective changes in their business. So I highly consider. And we appreciate Craig for being able to share a good amount of this data that typically costs a great deal of money. So without any further ado, Craig, I'm going to hand this over to you and would just love for you to prompt me through some slides for some of the learnings that you'd like to share today.
Yeah, no, thanks, Grant. Appreciate that. So we'll start with kind of what drives satisfaction. So when we measure, and we're now actually in field all the time, getting feedback from both people who have recently closed a loan, so have gotten a mortgage and completed the process, and also folks who are shopping. So we kind of have two different perspectives: those who are actively in the market, but haven't gotten the mortgage, and then those who have completed the process. And so we're trying to understand that. And what's shown on the screen here is what we call our index model. So when we talk about satisfaction, people oftentimes think about kind of a very simplistic way of thinking about satisfaction, but we actually found that what we call our index model captures the 6 elements that drive satisfaction. And really, probably no shock to most of the folks on the call, but communication is one of the most critical pieces of this, and closely behind is trust and kind of ease of the experience. But it's also, the product, the loan offering, meets my needs, the people. So all the different folks, and that's not just the loan officer, but all the different individuals who potentially are involved, and then digital. Now, digital is the lowest, relatively speaking, but I think that's, in some ways, these are isolated focus points. If you think about it, how you communicate, digital is going to be a key part of that. So we really want to think about this model helps you understand how the kind of levers that you're going to be working on are going to impact the customer. And I think this is really an important perspective, because if you're thinking about how do I deliver a great experience to the customer, you can't just say it's one thing. It's not just me being a hero as an individual, but I don't have good digital, because again, a lot of your customers may not be able to call you, may not have time to interact the exact way you think they're going to, especially younger consumers. So we want to make sure we understand kind of what are their priorities, what do you need to deliver. So this gives you kind of a higher level perspective of that. Now, if we go to the next slide, and we think about kind of what is going on in the customer's mind. I think early engagement, you brought this up earlier, and this idea of incubating customers. This is really impactful from an overall satisfaction standpoint, but also an impact on, you said 67% of folks are only going to one real estate agent. We're seeing similar numbers in terms of loan officers or lenders that they're approaching. So while a lot of folks may take a glance at pricing and maybe, again, check out the rates at other firms, in terms of actually applying, a large portion are only going with one lender. So once you lock them in, it's really impactful if you can get to them first. Now, if you're getting them late stage, your chances of winning and keeping them go down pretty dramatically. And what we find is that first time buyer, they want to trust you, they want to engage with you early. So that education, that incubation that's happening is critical. And I think in this market in particular, and again, customers have a lot of flexibility. It's highly competitive. Everyone's, fighting for every deal they can get. And like you said, real estate agents are potentially, they are good partners, but potentially maybe moving things around. So you want to lock that customer in and demonstrate that value beyond just, I talk about transactional relationships. It's great to execute at a basic level that'll meet customers' needs. But if it's just a product and they only look at you as a product provider, you're in danger, because at that point they go, well, if it's only about the rate and kind of the terms of the loan, I can go 5 other places to get and find out what their terms and rates are. If you're my advisor, if you guide me, if you help me understand what's important, that's going to be really impactful in retaining and kind of incubating the right way that keeps people from jumping for that next opportunity.
Yeah, and Craig, I mean,
Yeah.
this is great data. And Luke, would love to understand, I know we talked about the incubation side and how critical that is to purchase. Craig shared some data from JD Power on why that's so effective too. We looked at the human being aspect. and trust being incredibly important. We are dealing with people. Would love to get your insights, Luke, on how Clever takes that dichotomy of personalized relationships, um, incubation funnel, long tail, and real estate agents, and how do you make that coalesce and turn into the closings and the increased closings that you see for lenders?
Yeah. And, I'll try to frame this in a way that, obviously it's my job to make Clever look good, but I think a lot of these principles apply to any business. And there's a lot that can be deployed into a retail setting, into a consumer direct setting. So there's a few threads we're talking about. One is, how do you engage the consumer early on before you're at that point where you've just turned into a rate? And to take the flip side of some of the statistics that you shared earlier upstream in this presentation, Grant, we see that there's about a third of the market is first-time buyers, but that means 2/3 of the market is not. And what we see is a lot of folks going, well, how do I engage homeowners and people who might need to sell before they buy? And that's a new mindset for folks in the mortgage space, but trying to be able to reach consumers with a wider array of value props to bring to bear, and to be able to be a more holistic partner and going, what are you trying to achieve? I'm not just a mortgage. I'm going to try to help you get to your goals. And so if that's a first-time buyer, what they really need is that handholding and education. If it's a home seller, they need to understand the process of selling and then buying their new home. And some of the ways that you props on the, oh, sorry, you still got me?
No, I think you're coming a little bit in and out. Yeah, but I think what we gathered, Luke, is that there's new ways also to think about, even if you're a retail lender, engaging with your consumer. And 10% of the poll that we created earlier is how to do more with what you already have. And I think that that's a great theme, because from the concept that you just introduced here is, if you're a lender and you have a portfolio or a past database, right, you could also market to those homeowners, so the 2/3 of the market that already own a home, and be able to engage with them on selling their home so that you can recapture that person for buy-side transaction in the future. And I think that's kind of the main points that you were bringing up when we lost you for a little bit, right? You're there. Okay, I think we were able to nail that one, and Luke brought up an amazing point with that. So back over to you, Craig. We'll let you drive through some of the additional slides and data.
Yeah, so we move to the next one. So as we think about first, we're setting this up. Well, how do you establish that strong relationship? I think the next point, I often hear in discussions, it's like, it's all about rate. I mean, I think particularly when we were in a heavy refi market, rate was a particularly strong driver. But I think what is really important for everyone to remember, and Luke said this, and I think it's a really important point, you're helping solve problems for consumers. And particularly as rates rise, rate matters. Don't get me wrong. Like, if you're way out of the ballpark, if you're a lot more expensive than someone else, you're going to have troubles. And I'm not going to tell you you're going to win all these deals. But what we find is that a lot of the folks who say they're shopping around, they've looked at different lenders, the reason they left a certain lender was not because of rate alone. Now, a lot of people will say rate, but what we found in the data, and we've looked at this for years, is rate is the easy answer. It's like, why did you go somewhere else? Because I got a better rate. What we find is that most customers don't even understand that. And so, I mean, I've done rate shopping myself, and you look at it and you go, yeah, it's basically the same, almost the same exact number everywhere. And what we saw is that while a lot of people will mention rate, a lot of them will mention rate and poor customer service, longer process. Things were disorganized. They didn't understand what was going on. And so that engagement, that education is really vital. And we're seeing that goes down even more this year. So in the past, it was about a third were just rate. So when we asked them, they said rate, and that was the only answer they gave. Now it's 25% of rate alone. And what we're seeing is that a lot of the other factors really are something in the experience. I always describe it as something caused me to talk about rate. Something caused me when my real estate agent said, hey, you might want to consider another lender. I went, yeah, I probably should. So that's the key trigger point, is something in the experience. So it's really critical right now to make sure that once you get someone in and you've educated them and you're building up that relationship, you don't allow the process to break down, or at least let that customer feel disconnected, because that gives them a reason to shop. That gives them a reason to think about someone else. And that's really the key. You know, I was on a call the other day with a lender, and they were like, we have the best customer service scores we've ever had. I said, you better, because this market is so competitive, and so there's so many players. You don't have room anymore to make a mistake. You don't have room to be, you know, a mediocre lender. There's not enough volume out there. And that's what's really key. It's like, it's not good. I mean, being good is just a minimum expectation. So we're really pushing that, like, you know, it's not just about the product. It's not just about being there and doing the same old things. It's really about elevating your position with that customer.
Yeah, and I think, you know, it's interesting with rate, right? If we're looking at a standard purchase incubation cycle, when somebody gets pre-qualified and they begin shopping for homes, I mean, the lenders know probably even more than me. You're looking at, you know, 90 days plus in many cases. And, you know, to that end, from a consumer perspective, that rate that they were, you know, shopping when they got pre-qualified is immaterial, because the rate's not going to get locked in anyway until they get under contract. And so it makes a lot of sense in terms of it going down. And it brings it back to that the purchase game is really just a blocking and tackling game, right? And service seems to be the absolute best. And, you know, one of the things that I always loved about Clever was that they're the #1 rated real estate company on Trustpilot. So I think, you know, those are some things that everyone, you know, wants to align themselves on, especially in this highly driven service market. So thanks for sharing.
One of the data points I wanted to piggyback on here, Grant, was these middle sections about people having to go back and forth over the same questions that have been asked. And that is a complaint we hear incredibly often from consumers, that I think professionals don't realize how often, when our team is talking to a consumer, we're asking the same 20 questions that they just got off a call with someone else answering, and how frustrating that is, especially when the two folks are ostensibly supposed to be working together. And there's technology-driven ways to solve that problem that are not crazy complicated, but are really not done as best practices. Some of the sort of core 101 that we've invested in over the years, and I would strongly encourage others to think about, is effective sharing of notes and making sure that any documentation our concierges get on a call, whether it's about the loan and the buying journey, or about the customer's wife and dogs, all of that gets passed through to all of the other professionals in the transaction, so that when they're showing up, they can be asking new questions and not treading the same ground.
And that's an amazing point, Luke. And I just thought about that, because I had to like schedule a doctor's appointment through a call center about a week ago, and I had to give them a bunch of my information, and then they transferred me to someone else to do scheduling, and they had to collect all the same information again. And I'm sure everyone else has similar type of scenarios, but it's incredibly frustrating when it's like, you know, I just spent like 15 minutes giving everyone the information, and now I'm actually going to have to do it again. So I think that resonates well, and a perfect example of how it's just applied to this overall assembly line. Yeah.
And last call out on that for the lenders on the call is that this applies, in our experience, equally to the realtor as to the consumer. The realtor is also your customer and is also frustrated when they can't get the information that they need to show up and deliver a strong customer service. And, you know, we deal with this in helping lenders retain their business, because we have to play both sides there. And when realtors are encountering frustration or system problems, we're basically giving them ways to surface that, and we can go straight to leadership to get them resolved. But my call out would be you need some kind of mechanism where realtors feel confident bringing those issues to you and working with you as a partner to solve those operational problems. Or what I see happen a lot, especially on the consumer direct side, is realtors get frustrated and simply go dark. They stop collaborating with the loan officer. They take that consumer elsewhere instead of collaborating to work through the process issues.
Right. And no one knows that better than the strong retail players that we probably have on the line too, is that, they probably have developed a name for themselves with their referral sources on being able to bring a loan to a close. And oftentimes that requires, going an extra mile, understanding the customer's situation better, and going to bat for that customer with their own underwriting team. So I'm sure that resonates across the board too. Great. So, Craig, back over to you for our next learnings.
Yeah, no, and I mean, I'll just reference, so a lot of things you guys just referenced are what we find is additional points that continue to resonate. So we are definitely seeing that handoffs and any connection of data is really critical. So if we go to the next point, this kind of, again, is another data point on the process, but we find that the pre-approval process, engaging early, again, this is kind of that critical kind of first to the client really has that advantage, and we're seeing more and more folks are going after them. So as you're thinking about how do you approach that customer, helping pre-approvals to me is really at the heart of what we're talking about, is bringing comfort and confidence to a consumer. And that's really what the heart of all this is, in a tough market, rates matter, but it's really about helping them accomplish their goal, which is buying the home and getting, being able to afford it. And I think the points that have already been brought up, how do you help them solve these problems? If you're able to help solve problems, i.e. pre-approval, give confidence, I can go out and shop for a home, I can go out in the market and really think about this, I know what I'm doing, that's really resonating. And we're seeing that that's really increasing, the retention of the customer. And so as you think about tactics, that's going to be key. Now, if we go to the next slide, I think this is the other part, is what is influencing decisions and how is that kind of impacting trust? And we talked a lot about real estate agents. They're really critical. In the purchase market, they are, really the top, influencer in many ways about lender choice, but close behind is referrals from friends, family. The piece on the far right, I think, is an important one though, because this kind of, there's this, yin and yang, so to speak, of the real estate agent relationship. The trust of the consumer and their satisfaction with their lender oftentimes is negatively impacted by the real estate agent. And I think what was just brought up by Luke is, if I can't, as a real estate agent, I want to serve my customer well. And if I'm not getting the right information, if I'm not getting engaged properly, if things aren't working the way I think it should, oftentimes I'm going to step in as that they're my customer. I'm going to help them. I'm going to push them, and I'm going to go, we can go somewhere else. We can get this done somewhere else. And so what we see is actually, on average, those customers who are heavily influenced by the real estate agent actually have much lower ratings of their lenders. And I think a big part of that, not because the lender is doing a bad job, but because there's this almost conflicting issue that comes up when I'm trying to serve that customer, I want to get them closed, and there's kind of a back and forth. So we are seeing a lot of, the home buyer gets an influence from the real estate agent, but you want to be, understand what that partnership really is and kind of the role everyone's playing, because in the end, the customer wants, what do they really want? I always joke, it's like, I'm not out here to get a mortgage. That's not my dream, is to go get a mortgage on a house. It's to buy the house. And so how do you enable that? How do you help them kind of make good decisions to be confident? That's really key.
Yeah. And, it's, and these are just great reinforcing points, Craig. And it makes sense too, right? Because if we think about it on the real estate agent's perspective, they just might have spent like 6 months, 3 months, 2 months, 9 months, driving around with a prospective home buyer, looking at homes in a low inventory market, and kind of directly in the trenches with the prospective home buyer. And if that real estate agent, just taking the theme too, that that Luke mentioned, that, you know, the real estate agent is also your customer. And Craig, I think you said that too. They really are, right? Because they also sunk a ton of time in an investment in working with that customer. And, you know, if they're not clear on the closing process, and or if there's, you know, more docs that need to be submitted and the customer didn't know about, you just have that breakdown of communication that could be negatively used by the real estate agent and the consumer, given that the real estate agent has so much sway power. So again, having that trust built, having the infrastructure built, having real estate agents on your side, I think is a key component to not only just maximizing your business in 2024, but just for this foreseeable future, in being able to have purchase ground game. Right.
And to throw a few statistics out there, because something I love about the right side of this slide is the relationship between the driving power of the real estate agent recommendation and then also the directly controllable trust. And in our experience in the Clever Pro channel, how, you know, working with these lenders to retain their purchase business, those are really tightly intertwined as well. And for instance, we have a operating procedure where when we connect a consumer to a realtor who's come from one of our lender partners, the realtor then needs to call that originator and talk through the pre-approval. And the originators who are on top of their game, working for lenders who really make the most of that touch point that we're teeing up, teach the realtor about the conversation they've had with the customer, where they are in the journey, and the details of their programs. So now that realtor is having the first conversation with that customer, able to reinforce all of the brand messaging and details that that originator has given them. Imagine the level of trust that creates, because everyone in real estate has such a wide range of different products and experiences and local nuances to how things are done. And one of the biggest places we see trust break down is an originator's been saying one thing. Now the consumer gets connected with a realtor, and they're getting very different messagings, and the story doesn't line up. And so I think, you know, operationally, part of what Clever brings is that ability to structure those touch points and tee them up. And then where lenders can really take that to the next level is, you know, driving your trust and your reputation through the realtor, educating them and teaching them about your brand so that they're reinforcing that trust in every contact with the customer.
Yeah. And that's a great point, Luke, because I think, you know, especially for a lot of lenders that are out there or on this call too, you know, those that play heavy in retail, they typically have like a consistent flow of referral business from real estate agents. But what they're always looking to do is expand that pie, right? And oftentimes some of the retail companies that do expand that pie also are able to acquire additional new business, whether it be through digital marketing or lead generation and or buying leads, and then be able to show up to new real estate agents that they've been trying to penetrate and get referral business back with additional leads, right? And one of the greatest ways that you could actually establish trust with real estate agents, especially ones you've never worked with before on the retail side, is to go ahead and come bearing gifts, so to speak, right? Be able to show up with a prospective customer, be able to give a lot of the information and have that strong communication so that now it's the real estate agent that your teams have been trying to build business with say, wow, you know, I just talked to ABC Bank and they really wowed me just with the level of detail and information that they gave on this specific customer. And I'd love to work with them sometime again. And so those are some great ways to expand the pie and grow your purchase business, given that that was the number one thing that people wanted when we pulled the group. So great insights, Luke, and also Craig as well. So we'll move on to the next slide. Take us away, Craig.
Yeah. So, I mean, I think that what you just talked about really tees up kind of the role that the lender plays in terms of building trust and adding value. And I think particularly in this purchase market, one of the things we're finding is that you can't just focus on the process. You can't just focus on the end goal and execution of hey, we're going to get you through the process real quick, and we'll get you through the paperwork and do all the technicals. You got to do that well. But what we're seeing is that increasingly, to build trust and to build that kind of incubate really strong pipelines and really build up that relationship, you got to talk and help customers, not about just the process, but also things more broadly. Kind of financial guidance is what I would call it. And so we talk, we're seeing that increasingly, having discussions about budgets. What's going to happen after you close? Like, what's the total cost of home ownership? I mean, oftentimes we're finding a lot of the customers. So our surveys are people who have closed the loan. It's a couple months in, they moved into servicing, and oftentimes they'll come back and say, "I felt misled. You didn't tell me all the information. You didn't tell me about all this escrow information, how my taxes, and I thought I was getting a 30-year fixed loan, and I'd pay X amount for 30 years and be done." Well, that's not obviously the way it works, but people oftentimes don't understand, oh, I had home ownership duties that were coming on. I had all these other things that actually came into play. And so I think the more you can be, if you want to be trusted, if you want that repeat business, if you want future customers, helping them understand what it's like to be a homeowner, whether it's a new homeowner, even repeat buyers. I mean, like, we brought up earlier, it's like your sell to buy situations. Like, what's the guidance? How do you, if you can't lend to someone right now, but they're close, or even a potential customer, we're seeing firms are coming out and helping them. How do you improve your credit? How do you become a good customer? Because if you just say, hey, I can't work with you right now because you don't qualify, and you just push them away and send them off, they're not coming back. I mean, because you're not helping them, you're not solving any problems. And we're seeing a lot of that really increases if you can deliver that. I mean, you'll see on the top chart 3+ things. So if you're not just, you can't just say, hey, here's what the total cost of home ownership is and move on, but actually demonstrate you're listening and solving problems. I mean, that 779 on a 1,000-point scale, some might go, oh, that's a super high level of trust. That's almost a perfect score on trust. It's incredibly high and incredibly powerful in terms of advocacy and loyalty from that customer long term. So critical stuff, I think, for the purchase market right now.
Yeah. So basically, Craig, what you're saying is, if you're having a transactional relationship with a consumer and funding that loan with them, not making an impact, they end up going into the portfolio, and 7 years later, when they might have had an additional kid or two and need to upsize, now at that point, they're just not going to call you, right? I mean, you don't have that trust established.
Absolutely. Well, and if you're in the process of it, particularly if you're setting the budget and you're trying to incubate someone and you're trying to move them along, and maybe it's going to take at least 90 days, they're going to be shopping. You want to help them think about, hey, I want to achieve this. Well, let's be realistic. Let's help them kind of think about what they really can afford, because that's the nature of it. But if they walk away feeling like you really help them make a good choice, these are big decisions, and people are going to walk away with a really strong emotional feeling. You can be a hero, or you can be that guy who gave you a loan, and that's a really key difference there.
Yeah, and I think that's right. And I think there's so much opportunity in this market today, right? If we look at even like just credit card balances and lines, to have the opportunity to kind of speak the household budget language with the consumer and say, there's an opportunity for you to do a cash out refinance. And yes, rates were not what they were a year and a half ago, or 2 years ago, or 3 years ago. However, you're carrying a great deal of balance on your credit card here that you can consolidate, and also becomes tax deductible. These are a lot of insights that we hear lenders doing really effectively in terms of being able to drive that type of trust and speak the household economic language with the overall buyer. So makes a lot of sense. Well, great. So we'll continue on, and just wanted to share some things. I know we're coming close on time, so I do want to just hit these final points, and then we'll leave 10 minutes for any type of Q&A. So that gives us 3 minutes. I know I just teed it up, but the use of equity to consolidate higher debt and access to cash, that's a big one that we're seeing a lot of lenders take successfully and build that trust and that consultative model and understanding the consumer's pain points. And, trust is a very broad brush, but, just thinking in terms of tactics on how you're bringing value to the consumer, right? Because if you're bringing that value to the consumer, very likely they're going to trust that you know their situation and that you have their best interest in mind. Likely leads to the stickiness, especially with a lot of the corresponding data that we covered in this presentation. Leaning into the home buying journey. It's not easy, right? It's a long incubation cycle. You have a number of different players that are participating, right? That could be your loan officer, that could be real estate agents, that could be somebody's family member. So to have a strong incubation stack and plan going into 2024 is definitely going to give you a leg up, not only against, the natural fallout of people's purchase pipelines, but going up against some of these bigger consumer direct lenders, in particular, Quicken Loans, Loan Depot, a lot of these players that now have stacks around being able to incubate that consumer journey, which is something that Clever has been able to do incredibly well to give a lot of consumer direct lenders a strong ground game and being able to compete with the bigger guys. And then also looking at some of the other tactics in terms of contact methods, giving your consumer the ability to contact you in an omni-channel way, being always available, following up and making sure that you are appropriately giving that consumer the TLC that they need to ultimately build their trust and win their business for that long incubation cycle. So we really hope, and I want to thank the panelists for joining today. We hope that you enjoyed this session, that it was insightful, and that it gave you at least a takeaway to help you into 2024 and beyond. At this point, we got 10 minutes left, so I'd love to open up the floor for any type of Q&A that we have.
Well, Grant, I don't know if you spotted this one, but we had a very practical Q&A, which was, will the PowerPoint be shared?
Yes, we can go ahead and we'll share the PowerPoint out. Sarah, I guess I'll just send that to you, and you
if you could send it to me, I'll get it out to everyone that attended the call.
Okay, great. Yep. So thank you for your question, by the way, whoever asked that. We'll be happy to get that out to you.
Awesome. Yeah. If anyone has any questions, feel free to drop them in the chat. You can also email them over to me, and I can get with Grant, Craig, and Luke if anyone has any questions after this call. Looks like we have one question. Oh, not a question, just a comment.
Just a great. Well, Dave, we think you're great, so thank you. That was a great question. So, well, cool. Well, folks, thanks again for joining. We know it's hard, to balance time and to we're coming out of the holidays. You have we have holidays coming up, and we all got things to do. So we appreciate the opportunity to share some knowledge with you all. Again, we hope it was insightful to you, and we really appreciate your time. We want to thank our sponsor, Clever, last. And hopefully we are going to see you again into 2024. We wish everyone good luck and a happy holidays.
Awesome. Thank you guys so much. Everyone have a great day.
Thanks, everyone. Have a great one.
Bye now.